All right, good afternoon, everyone. What a day it has been the last 10 days or so. Surely has been a little bit crazy. We got big volume, you got bear market calls, so much to talk about today. Let's get into a little straight talk. All right, we are back. So Monday, January the 24th, about 4:15 here. Really an interesting day. Lots of stuff going on. To my iPad, let's see. Let's get rid of that. So Jeremy Grantham, here is that article. Okay, Jeremy Grantham doubles down on a crash call. Says sell-off has started. Now, a couple things about Jeremy. When I worked on the distribution side of the business, actually worked for a firm that would offer its product to financial advisors. They had one retail product, primarily an institutional investor. Jeremy is known as a bear. Now, if you get a chance, read this article, Google it. It's interesting. He makes some good points. He talks about, obviously, the Fed raising rates, what's going on there, and obviously with huge valuations, which we've talked about several times over our videos as well as our straight talk. So let's real quick get into what exactly is going on right now. First up, SPY, huge reversal today, as you can see. A couple things here that I do like. Obviously, when you reversed, we were in correction territory on the S&P. Correction would be 10% or more. Okay, so we did have a reversal. The other thing I look for is volatility. We did get above 30. If you recall, we go through our numbers there. Below 15, very good. 15 to 20, no problem. Choppy, 25 to 30. 30, we're out the door. So, when above it, came back down. That is a good sign. Of course, we're still in negative momentum. The other thing is volume has been through the roof. Unbelievable. We have 220 million shares. Normally, when I take a look at SPY, we're doing anywhere between, 40 to 60 million shares a day. So that shows you how massive the kind of volume we've had lately. Of course, the big story has been the NASDAQ. This is the Qs. What do I see here? Same thing, right? They were actually in bear territory. So 10% correction, 20% is considered bear. So had a tremendous, we were down 4.29 at one point. Really good reversal. Volatility index for the NASDAQ, which is the Vixen, VXN, still very elevated. Above 30 makes me cautious, so I definitely have concerns there. Same thing. Look at the volume, 183 million shares. I mean, we're doing probably 50, again, 75 million shares on that. So what a couple things that have happened when I talk about buy the dip and sell the rip. So Friday was what's called operations expiration date, OPEX. We had 3.3 trillion in options that were sold. You got to expect volatility. Not going to bring up the chart. I've shown it in the past. But always a volatile day. So I really felt that, okay, we're going to get through that. And then maybe we're going to get a short-term bounce here. Short-term, because our overall thought of the markets have not changed. So what else today? Behind the scenes, what's happening? So this is the New York Stock Exchange, okay, which is in black. And then you have new highs minus new lows. Clearly, that's pretty ugly. Even today, we're about minus 500 at some point there, minus 406. Those are big numbers, so more lows than highs, okay? When you go back to when things were really strong, it looked good. Even here, I've been talking about this. A lot of weakness in the market over time. So what else do I see here? Another chart that I kind of look at every now and then. So this is called the Baltic Dry Index. Baltic Dry Index, you can Google that. But basically, it's the average pricing of shipping in 21 different areas around the country. And it's very interesting. You see these peaks. Each of these peaks, and this is the S&P, look what happens. Peak, boom. So we peaked, okay, at the end of 2021. That is another sign that I'm looking at as far as this market, and has my opinion changed. Last but not least are options, okay? Take a look at the options market. You can see the shift change. So this is a equity put to call ratio. So puts is protection. We are definitely starting to see the protection go up. That tells you people are getting concerned about this market. So that's definitely one of the things that I'm going to be looking for as we do go forward, okay? Last but not least, I do want to talk about this because it bodes into what we're doing right now, okay? First off is the 10-year Treasury. We talked about this. We felt that it was way overbought there. We peaked out, and now we're starting to roll over. You can see it coming back down. That plays into some of our investments we have right now. You can see the momentum ready to go negative. So we're down about 1.73. Still anticipate this to go lower, and this is going to help some of our individual holdings. Not going to show a lot of those today, but do feel good about exactly what we're doing. So the other thing is, as far as the Fed, all right? Oh, man, I was trying to open this up. It didn't work, so I'm not going to go there. But basically, one of the things that a chart that I pulled out, it showed the Fed. So Fed and raising rates. If you take the Fed, so we're at 7% inflation right now. The last time we were at this type of number, okay, we were 1982, March of 1982. Where was the Fed overnight rate? 14%. Huge. To say that the Fed is behind the curve is an understatement. One of the articles I read this weekend talking about, look, they have to do something because you've got this administration that's having issues right now. The number one issue is inflation. So the only way to tame inflation is to raise those rates. So, when I look at this, what's different from previous times that they raise rates? Well, if we go back to 2018, I'm going to do a detailed video. Our monthly video comes out next Tuesday, the 1st. We'll talk about specific allocations at that time, where we are. I'll give you some updates on that high level today. But when you look at how far behind they are, we'll look at 2018. They had 3 rate hikes, okay? And then the market went down about 20%. We had the famous Powell put. The difference between then and today, okay, growth is slowing. Now, inflation obviously is an issue. Jolts. Those folks that don't have jobs, 10 million people, obviously going through the virus situation, supply chain issues, tight labor market, rising wages. There are so many things going on right now, and that's why this market is really so volatile. So, real quick, just to bring this all together and talk about game plan for this week. What, if anything, have we done? Yes, sell the dip, okay? I'm not actually, don't buy the dip, sell the rip. Not right now. Those charts, if I went back to the one chart, it definitely does not look good right now. If I went back to the S&P, let me switch back there real quick, see if it takes me back. All signs here in the S&P are still negative. Yes, we had a nice reversal. Yes, you're way oversold, but I don't think it's over the long term. So as we've done, we started selling, raising cash back in late December, have consistently done that. We've added to bonds, we've added to gold, we've raised cash, and we've sold all of our high beta tech type items. Today, when we sold, clients are always like, we get the email in the middle of the night. I literally was pulling the trigger. I set them up, and after we had that reversal when both the S&P and the Qs were up, I sold a bunch of stuff there as well. Still have some equities, but have really been positioning ourselves for what we see going forward. Again, big video coming out on Monday, give you some more details. That'll be on our YouTube channel. We will post in others, so make sure you like and subscribe and all that other stuff. So thanks so much for watching. Michael Loftus, Loftus Wealth Strategies, and Wealth and Wisdom TV.